Hello, everybody. Jim Malone here. It's Dow's Trading Floor, and it is a Thursday, and the market has swung back and forth, but it is now in a confirmed uptrend, which is kind of amazing because a lot of the Nasdaq stocks haven't been doing so good. So go figure. It's just strange, but we are actually in a confirmed uptrend, and what this means is we want to start moving back into the market, and it's kind of weird. You just kind of gotta follow the charts, and that's sort of what I've been doing. I did go back into the market today by buying the QQQ. That might have been a mistake because that is the Nasdaq 100, but that's sort of my modus operandi. Whenever the market moves from a uptrend, from a market in correction to an uptrend, to a market in a confirmed uptrend, that's when I moved back into the market. I was almost all in cash, and so I've been moving back into the market. Now, if you've been following me for a while, you'll know that I put out a bear put spread on Adobe, and Adobe just collapsed today. Kind of amazing because it was up, and then when the earnings came out, it kind of collapsed. So that one did really well. I'm out of that one right now, but I have another one. Now, I haven't gotten a fill on this one yet, so this is just a preliminary. I'll have the actuals tomorrow. And of course, if you're watching, if you're in the Discord room, which by the way, I highly recommend because we have some great traders in there, and it's been a little slow as of late, but when it picks up, I think you're going to find some really good trades in there. So I'm trying to put the trades I'm doing in and show you kind of how I'm doing that. So what I'd like to show you here is basically a deck from basically what this is this is a trade that I am putting together now. It's on Carmax, which is a big a car retailer, and they're set to have earnings on the 22nd of December, and the last several earnings have been up. So actually, this is a bull put spread, kind of interesting thing. Not a bull call spread, but a bull put spread. And I want to kind of show you this and kind of walk through what a bull put spread is. So here we go. This is basically how it works. We basically Carmax, even though they were off last quarter, their stock went up, and I want to show you that. And it basically the analysts now expect about a 3% growth in profits this quarter, and I do think that that's very likely to happen because cars have been very short during the pandemic, and especially used cars. And of course, if you know a little bit about the car business, that's where much of the profit is made, is in used cars. And so Carmax has been doing very well in terms of profitability. Now, I don't expect necessarily their sales to be maybe up as much as they were, but I definitely think you're going to see some increases in the profits. The company has about a 94 composite rating, which is excellent because that's 94 out of 100. So it doesn't get much better than that. And this wholesale auto parts industry is a very good, profitable industry, especially when there's lots of inflation. So that's kind of what I'm expecting. Let me kind of push over to kind of what I'm expecting. This is the chart for Carmax. And as you can see, this is the monthly chart here. We have had an ascending, it has been moving up as of late, and it's pulled back. And I want to show you the daily chart here. Let me see if I can pull over to that daily chart to show you. The daily chart, this is the daily chart. We were looking at the monthly chart. It's pulled back below this consolidation here. And this consolidation, I'm going to put that pin in there, it's kind of where that green line is there. And I do think this is a test, and we're going to see it move up now. That's my guess. Now, we have been moving down, kind of getting position. Here's how the spread works. Basically, what we're doing is we're doing things simultaneously. In the case, and I'm going to pull, let's go back to that. There we go. Let's see if I can get to there we go. All right, so basically what we're doing here is we're both buying and selling options at the same time to limit our risk. So here's how it works. We buy the the 21st January 135 put, and the price I was getting right before we came on the air was about $6.05. Now I don't have a fill on this yet, so I should know the exact number on tomorrow, and I'll update this. Then simultaneously, we're buying this lower put, and we're selling this upper put. So we actually, by doing that, we get a credit of $540 in the account. Now, if the maximum return that the maximum return we can get on the spread is $540. Basically, we get that up front. And so that would be on the risk, that would be about 117% return, or a little over 1,000% per annum. That would be great. Now, we will get this as long as we by the 21st of January, this stock moves above 137.30. Okay, so that's the break even. And we have almost a 50-50 probability on this. So that's pretty darn good. And plus we can adjust it when it comes out. Now, I've made up this little heat map here, and what this heat map shows is it kind of shows you based on how the underlying price, oops, got to get back to the right slide. The underlying price of the stock goes. This will approximate the value of that spread. So, if the price of this of Carmax stock moves up after earnings or before earnings, you see it's going to move into the green zone. But conversely, if it moves down, you see we're going to come into a bad way. Now, obviously, we probably want to close this spread. In other words, just reverse it if it moves below about 135. Now, what do I expect? Well, I kind of expect, based on the chart and the previous charts. Now we're going to go to the weekly chart here. I kind of expect that we are going to see we're going to probably see it move upwards after earnings. Now, why do I say that? Well, if we look, the last time it went through earnings, the very next day it went up. You see that? If we go 2 quarters ago, the very next day after earnings, it went up. Isn't that interesting? And if we go 3 quarters before, after it went through earnings, the very next day, it went up. So in the last 3 times, in the last 3 quarters, this stock has gone up, even if its profits haven't gone up. So I am kind of counting that it will continue that way of doing things. Now, typically, the way this trades, as you can see, before it comes into earnings, it typically will pull back. That's exactly what's happened here. It's pulled back, and in this case, it didn't pull back, but it just kind of stayed steady. That was 3 quarters ago. So this is following its pattern of pulling back before earnings, and then after earnings, trading up. Also, if you look at this chart, we're in a flat base, and a flat base is a consolidation, so it has a floor here and a ceiling here. So I'm expecting, at least in the next few days, for it probably to turn up after earnings. So that is the reason for this trade. And let's see if we can go over to the right slide here. Yeah, let's go back. Let's see if I can get it. Let's see if I can get it. All right. So if on this trade, what we're going to do is we're going to be buying. We're going to be buying one put, and then we're going to be selling the other. We're going to be buying the 21st January 2023 135 put, and simultaneously selling the January 21st 140 put. So there's a spread between this of $5. Now, why is it quoted at 140 and 135? Well, each options contract controls 100 shares. So that's the reason why you see this. Now I'm going to be doing 2 of these. You see, I'm going to have 2 times 100. So I'm going to put 2 contracts for a total of $540. This will be put into my account when I do this. Why? Because I'm selling the January 21st 140 put at 875 or $875 times 2, $1,750. So I'm going to receive that, and then simultaneously I'm buying the January 22nd 135 put. So 2 times that equals 6.05 times 2, or I'm buying and it's costing me $1,210. So the net is $540. This is what will be put into my account. Now, when I close this, meaning that I reverse this, I instead of buying this, I sell this and I buy this to reverse this, then I will settle up, and hopefully if I did it right, I will gain all or most of this credit here. So as long as this spread stays above 135.30 by the end, I should be in a profit position. Now, of course, if it falls below that, then then that won't be the case. But if this gives you kind of a look-see at what's going on, we're in, the break even is 135.50. I expect it to go up, so I expect this. Oops. I expect this heat map to kind of hopefully move up into this area, and then if I get to about 50% of the profits, I'll probably close it early. But you see, all this has to do is go up approximately 3%, and I make all the money at the expiration, which is on January 21st. That's when the contracts expire. Now, conversely, if it goes down below 135.50, then I want to close that early because I'm in a loss position. So that's kind of, in a nutshell, this little trade. So it's kind of a fun, kind of a fun little thing. So let's go and show you the slides, and let's get to it. All right. If you're looking, by the way, if you're looking on TikTok, you can see everything on this. Just go to my profile, click on the link, and you'll be able to see all these slides because I'm broadcasting simultaneously on YouTube. So you'll be able to see that. So basically what happens is the stocks were pretty mixed midday. The Dow went up, but the Nasdaq went down. So it's kind of bad. So I have this kind of, I'm flipping the coin. I don't know if it's going to go up or go down, but my indicators say that the market is in a confirmed uptrend. We came out of a market correction, so that's the reason for this there. So we should be trying to push back into the market. I was almost all out of the market in cash, and now I'm trying to push back into the market. So let's see if I can. Let me. Oops, previous slide. I won't do that. Okay, we'll go next slide. There we go. Next slide. So let's see. There we go. Okay. Right, sorry about that. Here are the major indexes. The Dow is off. I said it was up, but it was off. By the time I made the slide, it was off. The S&P is off, the Nasdaq is off, and the Russell is off. So basically, by the end of the day, we were all down. But it's a very weird market. It's kind of fluctuating, not going up too much, not going down too much. Just a tough market to trade in general. I did buy a stock today. This is the one stock that I did buy. It is a interesting stock. It's a Danish company called Novo Nordisk, and they are the probably premier company in the world for diabetes treatment. Now, why did I buy this and not a tech stock? Well, part of the reason I bought this stock was because we're seeing a lot of movement into many of the medical stocks, and this is a very, very good one because this one has they control about 40% of the world's insulin supply is controlled by this company. So it is starting to show some nice promise. I did buy this today. It is up a little bit, so hopefully I did the right thing. Here are the stocks that I currently have. I'm currently in Oracle. It is down. I am currently in Invitation Homes. It is down too. I did buy some QQQ. That is down significantly. Now, hopefully that'll bounce because I did buy a fair amount of that. Novo Nordisk gets up today, and then DR Horton, which is the home builder, it's down today. So not batting the best here, but hopefully we'll see something better. Here's a stock that you might want to take a look at. This is the stock of the day for IBD, Investor Business Daily. And by the way, I highly recommend Investor Business Daily. I get a lot of my information from there. And now I don't get paid a nickel from these guys, but I learned how to trade using CanSlim, and this is the method that they put out. So it can be very good. You can do very, very, very good in this. Anyways, this is Alcoa. I'm not so sure that I am interested in buying a material stock. Now, even though this is the stock of the day, I'm not currently in it, and there's a good reason that I'm not in it, and that is because I just think with all this inflation and everything, we may be seeing a slowdown in the demand for materials. I know that there's been a slowdown in China, and that is going to affect the overall cost of materials. We have been seeing a peaking in the price of steel. Part of the reason is because in China they built a lot of apartment buildings. That's one of the biggest drivers of their economy. And now with the debt crisis at Evergrande and some of the other things, they're not building a lot of this. So the demand for raw materials, the demand for these materials like aluminum, steel, and that kind of thing are going to fall probably in the worldwide, mainly because of the China demand. So this is one of the reasons I can't totally get behind Alcoa AA, but it is the stock of the day, and it has a very good pattern. So I am not currently in this stock, and I think I recommend a little bit of go slow, but I definitely think you should be taking a look at this sector. But this is indeed the stock of the day. Now, earlier I showed you a spread that I'm going to be doing for Carmax. I have another spread out there that is a bear put spread. I'm thinking Citibank will move lower, but it moved higher today, so I'm a little bit on the bubble. I may close this one early, depending on how this thing moves, but I am a little bit bearish on the financial sector, and this is where I have Citibank. So if you've been following along and you're on the list, you can definitely see how I'm trading this particular spread. I also have another spread, and this is a bull call spread. So I'm going all over the place here. And this one is for life storage. And I do think that the storage business is likely to do very, very well. And so that's the reason why they typically does well when there's a downtrend. Today it was at 144, up from 141. As you can see, we're moving up this green path. And then, if we get up here a little bit and I get in this zone here, I'll probably close it early for a profit. As I mentioned earlier, I did close the spread on Adobe for a profit. That was a bear spread, and Adobe took a licking yesterday. So I closed it and made a very nice little profit. So that kind of gives you the long and the short of it. So let's get to some of the questions. Thank you for holding on, everybody. So appreciate it. All right. Hope you're doing. Thank you. Could you look at PayPal and give a possible buy point? Now, PayPal has been pulling back, as you know, and that has been an issue with some of the payment stocks. MasterCard's in this category now. It does seem like it's sort of making a stand here, but it's still in a downward trend. And I want to kind of show you this, this stock here. We are below the 200-day line. This is not a good place to be, folks. You don't really want to buy a stock that's below the 200-day line. Now, I have put in this dotted black line. I actually inserted that. And that is a reversal line, and we're well below that reversal line. We have a relative strength of 16. So here's the thing, and I'm going to kind of give you the long and the short of it. On the checklist, and I definitely start with a checklist because I think this is very, very helpful because it kind of nets out sort of the stocks I want to be looking at and stocks I don't want to be looking at. Right now, on the William O'Neill checklist, this has a 44%. I would not accept this, and the reason I wouldn't is because I typically like to see at least a 67, possibly a 70%. So right now we're failing on 1, 2, 3, 4, 5 out of the 9 criterion. So not looking very good in that. So we are even, and we are still, the volume's holding up, but the price is not holding up. We're more than 15% below its all-time price high. Now, here's the thing that's so interesting. Many years ago, William O'Neill did a study, and he studied stocks and how they reacted and why certain mutual funds did better than others. And one of the funds that he came across was the Dreyfus Funds. And the interesting thing about the Dreyfus Funds is he looked and he saw and he plotted all of their buys, and he found out that Dreyfus would buy stocks not when they were lower, but when they were making new highs or they're very close to their new highs, and they're within 15% of their new highs. So in latter year, and so this became a key screening criteria for William O'Neill. It's one I follow too. You want to be buying stocks as they're making new highs or close or within about 15% of their new highs. Unfortunately, PayPal does not qualify on this case. Now, the old adage, of course, is buy low, sell high. Well, sometimes I think it's better to buy high and sell higher rather than buying low and selling high. So because sometimes when you buy low, it keeps on going down. Now, I don't think that's going to be the case with PayPal, but this is not time to be buying PayPal right now. I think you've got to be very, very careful. So here's my take on on PayPal. I would not buy PayPal at these levels. That doesn't mean that that I'm not going to buy PayPal ever, but I just don't want to buy PayPal right now at these levels because it's in a downward trend. We just don't want to buy a stock that's moving downward. It's not good. Now, trying to call a bottom is extremely hard. Here's why I don't like to do this. Yes, it's true. If you get it at the right place and it turns up, you're going to be doing great. But the question is, when do you know when it's going to be turning up? Here's how I sort of know. I'm looking for a reversal line. And what is a reversal line? Well, that's the top and then an intermediate and intermediate. This shows you what the general direction of the stock is. Currently, the direction of PayPal is down, so I would not buy that at this level. I'm sorry to be a party pooper here, but I don't think you want to buy them at these levels. I just don't. And so I would be just very careful right now, very careful. Let's look at Riot Blockchain, and let's get Square first. SQ. This one has been having some trouble as of late. It also has a relatively bad chart, and I want to show it to you. I'm looking at the daily, but let's go to the weekly kind of to get an idea. As you can see, it came right up to this consolidation buy point at 293.19, and unfortunately, it got too much resistance, and it's been on the downtrend ever since. So right now, this is not a place to buy. Now, doing some fundamental analysis. Now, what do I mean between fundamental and technical analysis? What we're doing here with this price action and this volume action, this is technical analysis. But if we go over here and we look at their earnings and sales, this is fundamental analysis. So fundamentally, Square, which is now called Block, by the way, they just got sued by Asian Block too. It's crazy. Their sales are starting to slow. Now, they have been extraordinary. The sales have been extraordinary. But now they're starting to slow, and their profits are starting to slow. So it's not that it's a bad stock. It's doing great things, but it's starting to move downwards. Here's probably what's going to happen with Square. I do believe that this will be a potential short. And the reason I believe this is a potential short is because several things have happened with the company. First of all, Jack Dorsey is no longer the president of this company. Second of all, their foray into crypto, it may be successful, it may not be successful, but right now it's not bearing results. And most importantly, I think that there's going to be just tremendous competition in this space, and it's going to be from some really big heavyweights like Visa and MasterCard. So I do believe that that stock, Square, or now what's called Block, is going to be a potential. This could be a potential short. And typically, when the market is in a confirmed uptrend like it is, I don't short the actual stock itself. if the market is in a confirmed uptrend, like the market is now, I typically like to short with spreads, like with bear put spreads or bear call spreads. The reason I do it is it's just a little bit safer, and it eliminates the potential for it gives you a backstop so that you can't lose. You can't lose at all. So here's the thing I would say with block or square, as they used to call it, symbol SQ. I do think that it is in a downtrend. I would not buy this thing. It's just, it was great in the summer, but everything has its seasoning, and right now I don't think that Square is in a good position, and so I would not be a buyer of it myself. I just wouldn't be a buyer for myself. Riot Blockchain, let's take a look at that, is also kind of in this downward trend, but I am a little bit more hopeful with Riot Blockchain than I was with Square. Why? Because we have this cup with potential handle forming here. So this is a potentially good pattern that's setting up. But right now, I wouldn't buy Riot Blockchain. Part of the reason I wouldn't buy it is because we're below that very critical 200-day line. I just don't like to buy anything below that 200-day line, and we're pulling back. But we could get an upward trend here. But right now, just like so many of these other stocks, I think you just have to avoid it, and it's kind of painful. Okay, let's take a look at some of the things from TikTok. What about NEO? Gosh, I hope you're not in NEO anymore, because NEO has not been faring well. But we'll take a look at the chart. It has a relative strength of 16, which is not very good. Most of the Chinese stocks are getting hit pretty hard right now. So I think you have to be careful with, some of the names like NEO, DD, BABA. You got to be careful with these names because they're getting a lot of friction right now, and so they're not doing well. With NEO, I just think you got to be out of it. We're trading below that 200-day line. Now, that doesn't mean that all automobile sector companies are bad. They're not. Automobile manufacturer 13 out of 197. Tesla has been pulling back a little bit, but Ford tends to look very good. So let's take a look at Ford. You see, Ford, though it's not viable because it's extended, Ford is looking very good, whereas NEO, unfortunately, is not looking very good at all. So here's my advice with NEO. I think you should stay away from it. It was a good stock for last summer, like so many of them, and but now not so much. Coming to a question of a stock that I own, it's Oracle, ORCL. And the question is when or if it will pull back. I think that Oracle is looking very good. I bought it. Let's see if I noted it. I bought it right basically, and I didn't note here right when it moved up and above the pivot. So I do think that we're in this zone right now. But it is up after hours, and I do think this is looking very good. We had a very good earnings report. I basically bought it right after earnings. Let's see if I can show it right there. Yeah, I bought it right after earnings as it gapped up. Now it's settling down a little bit, but hopefully it'll be able to hold the pivot, which is 98.95. So hopefully it'll be able to hold that. But it does have a relative strength that's moving up for the first time in many years. It's looking pretty good. 78 checklist. On the pattern rack, we're up about 5% above the pivot. We're still in the buy zone though, which is good. And they seem to be, doing well. This is one of the oldest. This is probably one of the oldest database companies out there. So, very old company, but it's what's old is new again. So I do think, at least it's faring pretty good. So that's kind of my take on it. All right, let's see if we can. Where's Santa's rally? Boy, Santa, I'm wearing his Santa. I don't know where Santa is. He's lost. I don't know where he is. I will definitely be reporting if Santa comes to town, because I certainly want to see Santa come to town. I think he's lost. I think that the GPS got turned off or something. I don't know what's going on. I don't know what's going on. How to find the best stocks under the IWM? Of course, the IWM is an ETF. Let's look at it. IWM. This is the Russell 2000. This is looking at the small cap stocks. I don't, it's funny. I typically look for, the way I look for them is by the sector. I don't know if you can do this or not, but the way I typically look for stocks is to see which industry groups are doing the best. So let's go to the industry groups. I kind of take a look to see, and really what I'm looking for here, not just looking for the top industry groups. I'm looking for the groups that have had the best change in the last few, in the last few weeks or so. So what I'm doing is I'm looking for stuff that is moving up and moving up fast. So one of the groups that has been moving up very, very fast in the last few sessions has been this transportation truck area, okay? And many of these stocks are in the Russell 2000 because they tend to be smaller. There's 19 companies in here, and 6 months ago, this was 103. This was the rank. There's 197 ranks. It was 103, and today it's number 3. And 3 months ago, it was 59. So there's definitely money flowing into this area. So this might be a good place to look for potential stocks that would be in the IWM that might work. So let's kind of look here. Old Dominion Freight is probably the biggest. So let's take a look to see if there's anything that's setting up well in this trucking area. Well, unfortunately, it looks as if Old Dominion is a good stock, but it's not setting up well. It's way above its buy point. So let's look to see. I was in yellow, but I got shaken out. So let's see if yellow may be back. I don't know if it is. We shall see here. Well, that's extended too, I'm afraid. So I want something with a better. I want something with a. I just want something with a better chart pattern in the trucking area to kind of see. Now, the one that I've been hearing a lot about is Sela, and that's extended too. Gosh, they're all extended. I'm trying to find one that is not extended that we can kind of look at, we can analyze here. Let's see. Okay, so Sela, Forward Air, Warner Enterprises. Let's look at Warner. Yeah, okay, so this is in a consolidation. This is a little bit weak, but it's in a consolidation. It's below the buy point, which is good. The buy point being right here at about 49.76. It's currently at 46.06. So this might be a possibility. It's a little bit weak on the relative strength. You look at the checklist. 67 is not bad on the pattern rec. We've got 7% to go for the pivot, so that's buying it correctly, basically, as it's moving towards the pivot. That's good. So, yeah, not a really very exciting stock here, I can tell you that. Warner Enterprises, symbol WERN. So that's one that I might want to look at. All right. Hey, Jim, Nike movement tomorrow. Well, I don't know. I got shaken out tonight. I had to exit my Nike position. I'm going to show you that. I was holding for it, but I think it is getting some support. I just finally had to, I just finally had to throw in the towel on this one because it was pulling back, and even though this is probably going to be a handle here, it's a cup with a handle. It probably is, but with earnings in 4 days, I just said, well, when it moved below that 40-day line, I just was out because I just think that there's a little bit too much risk right now. I think it's looking like it's getting support at the bottom of the consolidation, but we don't know. We just don't know. Right. Let's look at Net. This is Cloudflare. These guys are based in Austin. I was down there last summer, and I saw their world headquarters. It was very exciting. No, just kidding. Unfortunately, this stock, like so many of the other ones, is just not behaving right. They're just not there's not that many setups right now that I've been seeing. I've been trying to buy all the setups that I can find. Barring that, let's see if we can find some setups, because that would be good. It looks like according to this, there's like three, maybe there's more, 3 setups in this. Really, really unexciting stocks here. Here's one that might be setting up, and that's Anthem Health. Not an all-time favorite of mine, but Anthem Health. This is setting up very nicely. That's one of the reasons I bought Novo Nordisk this morning, was because there's a lot of movement into the medical space. Of course, Anthem is one of the biggest hospital companies out there, so this is definitely in there. This is kind of a slow pokey stock. It's got earnings in 41 days. I don't know. I don't know if I would buy this one, to be honest with you. It's got a very, very good checklist, but I really don't particularly like this area. But that might be an idea for a stock. It's just right now there's not as many good setups as I'd like to see. I'll be honest. I can see more and better setups. Let's look at Denbury. Of course, that's a oil company, and it is, oil, inflation and oil are kind of kissing cousins. So you would think that, it would do great in this environment. It sort of is, but it's pulled below the pivot. The pivot's 81.37. It's now 74.26. I kind of want to see it get some support. Now, it didn't get support at the 40-day line. It's still above the 200-day line. That's good, but it just is weak. The action is kind of weak on it. Fair amount of selling going on here. So not necessarily the greatest place to enter this. I did have the stock. I was stopped out of it, and I have not been back in since. I do like the stock. I think it's in a great area. Even though it's been 6 months, the oil and gas U.S. E&Ps, 45 out of 197. So that's looking pretty good. But I just wouldn't be a buyer at this level. I just wouldn't be a buyer here, just based on this, these setups. So not the best setups that I would like. All right, let's look at Nvidia. Everyone's favorite stock. This is the stock that I would like to buy back. I haven't been in it in a while. I was stopped out. I'm still very much of a bull on the stock. I think this is a revolutionary chip company. It's just that the action as of late has not been really good. It hasn't really been that good on AMD either. So just for full disclosure, now it does look like it's gotten some support at the 40-day line, which is good, but we're still extended, unfortunately. What do I mean by extended? Well, it's the pivot plus 5%. That shows that's where you should be buying it. You should be buying it in this zone here, this little blue zone here. This is where you should be buying it. Unfortunately, we're way above that. It didn't hardly give us a chance to buy it. As you can see, it just popped. Back in October, it just popped right through the buy zone, and then you couldn't buy it again. So, and that it's been a tough. Nvidia has been a tough. It has been a tough one to buy. I just wanted to put my notes back in here. I did have a stop loss here, and I did buy it here, and then I wrote it, and then so this is, can we buy it here? Well, I'd be a little bit reticent about buying it here. I really would. I just want to see some more. I just want to see some more strength. That's mainly the thing. It's on my watch list. I definitely want to see some more strength on Nvidia. I want to see more strength on Nvidia. The chart that I have here is where I would have placed my stop loss had I been in it, and that would have been right here at the 40-day line. As you can see, it's respected that last 2 days. So I still think that if we get a solid reversal off this, which we have not yet gotten, see, I'm going to draw the reversal line here. If we get a solid reversal above that line, that might be a place that we can buy it. So what I'm going to do here is I'm going to put in I'm going to put possible buying opportunity. So I'm basically looking, what I'm looking to have happen for Nvidia is for it to have that reversal, move above this line, and then we're in hopefully an area where we can buy it once again. But right now, I have to say no to buying Nvidia at this level. Tough stay. Okay. Question on Moderna, mRNA, a buy or a hold. Let's look at Moderna. I'm going to go over here to the Moderna uh, uh, chart. Is that a buy or is that a hold? Well, it looks like it's getting a bounce at the 200-day line, but I still think that that's a hold. I wouldn't buy it at this level. Would not buy. You know, would not buy. Would not buy mRNA at this level. I just wouldn't do it, just because it's right at this 200-day line. It needs to show some more support. This is it sort of had a buy point up here at 164, but if we draw the line, that's the reversal line. So, I mean, we could if it reversed above that line, maybe, but right now it's in a downward trend. So I would not be buying Moderna at this level. All right, let's go to the questions. Great question. This is a question on your thoughts on DVN. Let's look at DVN. And this is Devon Energy. I do like the energy companies, but they just haven't been, as of the last few weeks or so. Well, not really weeks. They've been sort of consolidating and waiting to go higher. Kind of, I think, really, trying to see kind of what what's going to happen with all the inflation potential. But unfortunately, this is extended, so you can't really buy Devon at this price. It's right now. EVN is extended. So you have to just watch list. So here's the thing: I wouldn't buy it at this one. I wouldn't buy it at these levels because it's extended, and there's a 31.99 buy point here. But we're too far above that. We're too far above that at, that's where it basically gave us 2 days that we could get in. Boy, I tell you, that's how it's been running. I did buy a full position right below here, and then I wrote it up. Now I didn't put my sell in here, but I sold, I think, when it hit the 10-day line. I've got to make sure that I continue putting these sells in here. But I was in this basically on, back in September at 29. As you can see, I bought it below the pivot. This is always a very good place to buy it. When you have a consolidation like this and it starts turning up, that's when you want to buy it as it moves through that pivot. But it really didn't give us a long time to buy it. It gives 1, 2, 3, 4, 5, 6. Basically, only 7 days could we really buy that, and that was basically from about here where I entered it to where it moved above the pivot in the buy point. So, these great stocks, they don't give you, unfortunately, that's the problem with them. They don't really give you a whole lot of time to get in them. I mean, that's the thing. I mean, it's they just don't give you a whole lot of time to get in them. Now, here's one I did get in this morning, and I did mention this earlier on the show, and that's Novo Nordisk. And part of the reason I did it was because, these great stocks, a lot of times they don't give you a lot of chance to get in. This one is just moved past the buy point, was able to hold it. That's why I bought it. Why? Because it got to the pivot basically on Tuesday. Then Wednesday it held it, and so I bought it on Thursday. Now, hopefully, it'll be able to hold this level, but I think it probably will, but we'll see. But, these great stocks, they don't give you a whole lot of time to get in, and that's the thing. So, I'm continuing to look for setups, and, I try to buy in the best setups that I can because it does make a big difference. It's not just enough to buy It's not just enough to buy a good stock. You got to buy a good setup, and it's hard. Oh, hey, how does your Discord community work? Yes, absolutely, absolutely. Unfortunately, it's not a one-time fee. It's per month. But yeah, we're on right at the open of the market. I try to analyze all of the trades. I try to analyze as many of the trades as I can. And throughout the day, mostly in the first hour and two. That's really when we're looking at what to buy, when to buy it at the open, and then during the day, I try to answer as many questions as I can. We have a lot of also very good people in the Discord rooms that have many good things to say. So that could be possibly something that you could really you might really like. But I think I can pull up some testimonials here. Maybe this would be of interest to you. Let's see if we can do that. So okay, let me see if I can pull in some slides that give some of the testimonials that we got just directly from the show. So let's see if I can do that. Let's see if okay, there we go. Let me put so I gotta well, I guess I can't. I can't get it there, can I? All right. All right, let's see if there we go. Okay. So let's see if I can put that in. Oh gosh. Thanks for bearing with me here. Okay, let's select that. All right. So let me just put up some of the things that we had in there, and let's see. Yeah. So let's see if I can. Okay. Yeah. This comes directly from this. Bid buying results. Okay. 15% gain. Okay, that's pretty good. Tesla's. This is a while ago. Nice profit. Okay. These are just kind of things that people are saying in the in the Discord room. I analyze try to analyze everybody as quick as I can. Here's somebody that did. This is an upstart. Was doing well. Made about 154%. So that's pretty good. And wait a minute. There we go. Get all these things here. Kind of show you. Anyways, this kind of gives you an idea of sort of what the thing is all about. So that kind of shows you. So if you want to take a look at that, it's super easy to do. All you have to do is go to www.dallastradingfloor.com. So enough of the promo. Thank you very much for that question. I really appreciate it. All right, let's look at. It's true. I do look like some cartoon characters. Do you think growth stocks will rebound, or do you see more downside? Unfortunately, I see a little bit of more downside for some of the growth stocks just because of the interest rate fears. When interest rates go up, it can be very detrimental to growth stocks. Growth stocks tend to. Part of the reason that this is such a weird market is that we're seeing things like consumer staples go up. This is a very defensive area. So right now with the right now with the I think it's XLS. I don't know if it is. With the interest rates going up, it's gonna impact a lot of the growth stocks, and so you're gonna see much more emphasis on companies like the consumer staples companies. Let's take a look on one of the ones that I think is always a bellwether. This is the ultimate Warren Buffett stock. It's Coca-Cola, and it is in a buy zone right now. I have to say so. This is kind of where the market is going right now. Consumer staples typically, and these non-alcoholic beverages tend to be doing very, very well when there's uncertainty in the market, especially when there's inflation. And right now, Coca-Cola, believe it or not, is in a buy zone. It is absolutely in a buy zone. And I don't, this is not one of my favorite stocks. I'll be honest with you. This is the kind of a stock that you buy and you hold forever. I mean, I don't think Warren Buffett has sold any of his, maybe he sold some of his shares, but basically it just holds us forever. It doesn't have a particularly good checklist, but it just chugs along, and it has excellent fundamentals, of course. Believe it or not, Coca-Cola sales are actually going up. It's amazing. I don't know how they can sell any more of the stuff than they do, but they do. Figured out a way every quarter, and that's the case here. Would I buy Coca-Cola here? Well, it is in the buy zone. If I had to have exposure, if I had to be invested, probably, but I'm not. I'd rather leave it in cash, wait for a good or better opportunity. I don't really like stocks like that all that much. All right, very good. Adobe went down. That's good. You didn't close your puts. Thank you very much. Yeah, no, I did close my spread. I did close my spread today, and I did make some pretty good money. So let's see if I can show you. I want to kind of show you exactly how I traded it, because, I'm trying to be as transparent as possible, and because when I was learning how to trade, that's one thing that I hated the most, is that people wouldn't, they wouldn't show how they traded, and I didn't like that. So I'm trying to be as absolutely transparent as I can be. And so let's look at Adobe. I did put in my trades here, ADBE. Of course, it's a symbol for Adobe. Pull that up. It takes a second for me to load it. All right, let's go and see if I can show you that, because that's a very, that's very valid what you're saying. Okay, previous slide. Okay. So this should be, let's see if it's, yeah, okay. Let's see if I can show you what I did here. Okay, on this trade, as you can see, this is how I opened it. I think you can see it. And then I closed it this morning, basically by buying back these and then selling these. So we were up in about 3 days. We're up very good. I did this with 3 contracts, so we're up almost $600 in about 3 days. So that's pretty good, considering we didn't really put out anything but credit there. So that's how I did trade that. So if you're interested in that, by the way, if you are interested in these kind of trades, I do put some of them, not all of them, out on the on the action trade alerts. This is the free portion. I don't put all these. Anybody that's in the Discord room gets access to all of the trades and everything, but I do put some of the trades out at www Dallas Trading Floor. I do have one out right now, which is the and it hasn't been filled yet. This is the Carmax trade. So if you're interested in that, you can sign up for that. It's free, and but obviously, if you want to get the more up-to-date stuff, you need to be in the Discord room. But this is a great way. That we did make a little bit of money on that, and so hopefully some people are trading along with us and making some money. That's always important. All right, can you check CF2 seeing a nice head and shoulders? Oh, cool. By the way, everybody out there, head and shoulders pattern is a very interesting pattern, because that is the shorting pattern, and it's very good that you picked this up, Colmazy, because this is what we're looking for when we're looking to short a stock. Now, I probably would not agree with you that this is a short, okay? Based on this is not a head and shoulders that I can see. I'm not trying to give you a hard time here, but I don't think this is formed yet. We're still in an ascending base. This stock is still ascending. It has to have capitulated and come over. I want to show you a stock that we do have potentially head and shoulders on, and that is BABA. I want to show you this kind of quickly. This is much more of a head and shoulders pattern, and as you can see, I've shorted this one before. We have the left shoulder over here. This is the head, and this is the right. This is the right shoulder. It's kind of right here. And see, what happens is that when the stock starts to fail, and basically there's several things that we want to look for. We want to look for the 40-day line to cross the 200-day line, which it has. That's called the death cross. Then we want to see this 40-day line move down. Now you'll notice that the stock will pull down, and then it'll pull up, and then it'll pull down, and pull up, and then it'll pull down, and it'll pull up, pull down. And right now it's pulling up. So this is getting ready to short in a very big way. It's a $120 stock. I think it's going to be a $100 stock soon. So this is a better head and shoulders pattern than we might see. Now I'm going to be probably doing some. I don't like to short the underlying stock if we're in a confirmed uptrend like we are now of the general market, but I will do the bear put spreads or the bear call spreads. And the reason that I like to do that is because that limits the risk. But yeah, this is more of a head and shoulders pattern. Now there's another stock that we could look at that I think may have that characteristic, and that is Beyond Meat, BYND. Now, I was making money with this last year, but this is starting to look a little bit like Christmas. Okay, a little bit like Christmas, right? This isn't a pure head and shoulders, but this is looking like a head. This is looking like a shoulder. And this is looking like a right shoulder. You see, after the right shoulder, then we have it pull up. Typically, it'll try to pull up to the 200-day line. The 40-day line will cross below, as you can see, and then it will try to grab it. It'll kind of come up. It came up there, and right now it's trying once again to come up. I have a feeling that this is going to go boop like that down. So this might be a potential short here. I'm not saying that it is. I want to do a little bit more analysis before I would say that. But this one may be a potential short. It's Beyond Meat, and if you this one may be in trouble. I'm not saying it is, but I think that BYND may potentially be a short. And, that's one of the great things. Once you learn how to short, you go, wow, why didn't I know about this before? Because it is a great way to make money in the market. But this is kind of what you want to look for. You want to look at something that everybody's been in. And remember how popular Beyond Meat was? Everybody wanted to be in it. You want to be something that everybody's in. See, there's still a lot of people in it. These are the funds that are in it, okay? And it is, their sales are going up, but they're not making any money. And there's lots of competition. So, I think they may have a deal with McDonald's. So you probably don't want to short it right now. But this is the kind of pattern you're looking for. You're looking for something that everybody loves. And then they get all excited and they all get in it. And then it kind of bounces around. And then the 40-day line crosses below that 200-day line. And then it starts doing this pattern. It starts going down and then going up and then going down and then going up. And then when it goes the third time here, 1, 2, 3, that's usually when it has its biggest fall. And these can collapse big time if the conditions are right. So this is one that I think you might want to look at for a potential short. It's Beyond Meat. All right, let's look at DraftKings. He's down 40%. Here's something, and I want to say this to everybody, and this I had to learn this the hard way. When you're down more than 7% on any position, hard as it is, sell it. And the reason that you want to do that is because, let's see if I can DKNG. The reason you want to do that is because of the law of I call it the law of gravity. Law of gravity. And that is things that start to go in one direction tend to continue in that direction. Unfortunately, that's been the case here with DraftKings. I was trading DraftKings big time last year. In the early part of last year, I was really into DraftKings hard. But as you can see, it made this cup with handle, but then it couldn't. But then there was the death cross. I keep talking about the death cross. But what the death cross is where that 40-day line moves below that 200-day line, and then it can't recover. That's the death cross. That's a good shorting signal. And then when you get them pulling up, that's where you want to short it. But you're down more than 40%. So here's what you need to do. Here's what you really should do. And this is going to be very hard. And you'll probably disagree with me. You'll probably say I'm a jerk and all that. But you got to just sell it. You got to sell it now. Take your losses. And here's the thing about the 7% rule. If you take 7% losses and no more than that, you can get back to zero. But if you take a 40% loss, it's going to take you 80% gain in that stock from where you are now to get back to even. So just trust me on this one. Take your loss, sell it, and preserve some of your capital. And there will be other opportunities. There absolutely will. I am living proof of that. I am living proof of that. Okay. All right, let's look at TTD. This is one I had to sell too. I got stopped out of this one. And you know, I get stopped out all the time, and I want to be clear about that. You know, I was stopped out of this position in TTD, and you know, what I did is that I'm pretty strict. I come in, I set my stop, and if it falls below that, well, you know, that's what happens. You see, on 12/14, I was stopped out at 88.42, but guess what? It's now lower than that. So I guess that was right in my way of thinking. I bought the full position here. Say I bought it at 88.64 here, but it couldn't hold it. So guess what? I basically stopped myself out here at 88.62. So I basically went nowhere. But then again, I'm waiting for a better setup. That's always the thing. I'm trying to buy on the best setup that I can, and then you know, and then move that stop loss up with it so that when it pulls back, I've got a profit. But here's the thing: right now, I think it's you know, right now we're below that buy point on TDD. But you know, can we regain that buy point? Well, I don't know. The buy point is 90. We're below that. We're in a downward trend, so I would be watch listing this one right now. I'd wait for a confirmed reversal before. So you know, I think you just got to watch this one. But I wouldn't do anything here. The interesting thing about trading stocks, it's kind of like, oops, I didn't say watch this one. It should, yeah, yep, yeah, watch this one definitely. The interesting thing about trading stocks, it's kind of similar. I don't know if any of you out there have ever hunted geese, but basically what you do is you get in the blind and you wait and you wait and you wait and then until the right moment and then you shoot. That's kind of the way. That's kind of the way I view the stock market. 90% of the time, we're not doing a whole lot. And then, you know, in that 10% of the time we're making all the money. So there you go. All right. Hey, Jim, is SoFi a buy? And an interesting company, SoFi. I think this fintech area is very interesting, but unfortunately, I do not like the stock right now. We're in a downward trend on SoFi, but there is some good news. The 40-day line moved above the 200-day line, so that's good. That's called the golden cross. So that's actually a very bullish. That's a bullish signal. So the question is, can we get a reversal on this? Well, we might be able to, but the relative strength is 30. I think you just have to watch this one and wait. I think you just got to watch this one and just wait. So I wouldn't be a buyer right now. It's just not set up properly. That's the main thing, is the setup. Well, everybody, it's over an hour. I have yammered on here, but I so appreciate you dropping by. And let's see if I can see all the other questions. Oh, I'll do one last one. Thanks, Elsa. Appreciate it. Tesla, let's look at it. This is the last one. I got a TSLA. Let's look at it. Gosh. Here's the thing I'd say about Tesla. I love Tesla. I made a lot of money on this last year. This actually bought my mortgage. This bought my house last year, believe it or not. Just one stock. But this year we're in a basing period. We're going to have to wait for it to consolidate. So I just think you can't do anything right here. There is some support right here at 900. Just brought that line across. Right now we're at 918. So not a time to buy it. Time to wait. There will be a signal. We just got to wait on this one, and it is painful to wait, but we just got to watch. We just got to watch on this one. Watch and wait, because this will turn around. But right now, it is not a buy. So don't buy this one right now. I'm not ready to go. I've been out of it. I've been out of it for a while. I was stopped out, and I haven't really been back in because it hasn't based out right. Okay. Well, thank you, everybody. Very, very much for watching today. I'll be back tomorrow for Friday, and hopefully I'll have the spread ready for you, and do sign up for it. I will have the spread ready on Carmax. So that's kind of coming up, and that's kind of cool. I'll be back at 3:45 tomorrow, and till then, happy trading, everybody. Oh, by the way, please do this if you can. I mean, if you can do this, this really helps me. I didn't really notice how much it helps me. But if you could like this show, that would be really great if you could like this, because obviously if you like it, it gets it out to more people see it, and hopefully, more people will, trade along and make money. So please like the show. If you like it, please hit that like button. So appreciate it. And do subscribe to it as well. So until tomorrow at 3:45, everybody, happy trading. Thanks for watching. See you soon.